So let us look at Motilal Oswal Financial Services. So I personally have rejected the stock and I want to explain to you the reason why I have rejected this stock. Okay. Shows very good relative strength, but I find some weaknesses in the numbers of the stock, which is why I choose to stay away from this. There was a famous investor in India. His name was Rakesh Jhunjhunwala, a legendary figure in the Indian stock market. They call him the Warren Buffett of India. He once said that you don't have to attend every party in town. So, which means you don't have to buy every stock, you don't have to buy every breakout. Okay, if you see some weaknesses, it's better to stay away. So, this is a perfect example of that. So, as usual, let us do our three kinds of analysis that we do on each stock, which is comparative analysis, technical analysis, and fundamental analysis. So I will sign in here. Let us go to Motilal Oswal. Yes. So I click on consolidated here. I click on daily. I will expand this. Now have a look at this. For comparative analysis, I look at price strength, buyer rating, and industry group rank. So price strength is 92, which is fantastic, which is absolutely ideal. I want this number to be more than 80, preferably more than 90. Okay, this is 92. This is beyond excellent. Okay, buyer rating, I want it A or B. In this case, it is A minus, which is fantastic. Group rank is a problem. So industry group rank is 68. I want this number to be less than 40. I want it to be in the top 40 industry groups. That is not the case here. So immediately you can see I see a weakness here. Moreover, I want to see whether this group rank has improved or worsened. So I go here. Here I have created this link. Okay. Industry group link. I think this is only available for people who have subscribed to MarketSmith service, the pro members. Okay. So I am a premium member of the MarketSmith platform. So I go here. What is the industry? Finance, investment bank, and bankers. So let's go to finance, investment bank, bankers. See, 6 months ago, the rank was 26. Now it is 68. So the has industry group rank has increased, means the industry strength has declined. Okay. So not only is the group rank not ideal for us, but also the industry strength has been declining. Okay. So out of four factors, price strength, buyer rating, group rank, and the improvement in the industry, out of these four factors, only two are in my favor. Buyer rating means we have to check whether the stock has got institutional demand or not. This number should be A or B. So out of four factors, only two are in my favor. So I see some weakness when I do the basic comparative analysis of the stock. Okay. Now let us go to technical. In technical, we look at the chart. Okay. So technically, it looks very good. So the price is above the 50-day moving average. The 50-day moving average is above the 150-day moving average. The 150-day is above the 200-day simple moving average. Okay. That is what we are looking for. That is a strong stage 2 uptrending stock. Moreover, there are 10 candles in the base. That's the minimum we look for. Then we count the points in the base 1, 2, 3, 4, 5, 6. Okay. There are 6 points in the base. The price is above the moving averages and there are minimum 10 candles in the base. Okay. So point number 5, becomes my buy point. So that's my yellow line, which is the high of this candle. Start counting from this candle because this candle completes point one. So 1, 2, 3, 4, 5, 6, and so on. So there are minimum 10 candles in the base, blue, green, red, the moving averages, and the 6 points in the base. And the buy point, I think, is in the green zone, in between green zone and the blue zone, which is fantastic. If the price is in blue zone, then I would prefer to have 6 points in the base. Okay, so nice consolidation. So price is contracting, volume is contracting. As you can see, most of the volume bars are below the blue line. So you see price contraction, you see volume contraction. That's a consolidation pattern. And icing on the cake is the mother baby candle. This is called as an inside bar. So the high and low of this candle is within the high and low of the previous candle. So that I call it a mother baby candle. Mother baby candle means a breakout is imminent. The only problem is we don't know on which side the breakout would be, whether it will be upside breakout, downside breakout. I don't know. I just know that the breakout is imminent here. Something is likely to happen because this is extreme tightness in the price. So whenever there is tightness in the price will break out either way. Okay. So technically it looks very strong. However, see, I am looking for signs of weakness. Okay. If there is weakness, I would be cautious about the stock. See, there are blue dots here. Blue dot means 52-week high of the relative strength line, this blue line. Okay. Which is very good. If there is a blue dot in the base, that's a powerful stock. That stock has a high probability of breaking out on the upside. Okay. So everything looks great. So then what is the problem? So you click here, you see it says pattern consolidation, stage number 4, the upper rectangular box. Stage number 4, actually it is not stage 4, it is base number 4 within the stage 2 uptrend. So base number 4 means the stock is in late stage within the stage 2 uptrend. So what do I mean by that? So if you go to the weekly, you see the price has gone from, let's say, 137 to almost 1,000. So how much is that? 8 times, roughly 8 times or 7 to 8 times the stock has gone up. Okay. So 700% to 800% return. Can we say that? Or sorry, 600 to 700%. Can we say that the stock has given that much return from March 2023 till now? It is December 2024. So roughly about 12 plus 9, which is 20 months, 21 months, it has gone up 7 to 8 times. Okay. So you are buying it late, correct? So the ideal time to buy the stock was between March 2023 and December 2024. If I were to buy this stock in December 2024, I'm probably buying it late. Okay. So that's what I mean by stage 4. See, it says OL. OL means off the low. This is the 52-week low. 232%. Within 1 year itself, the stock has given 232% return from the absolute low of the previous 52 weeks. Okay. 232% return. That's, you're buying it late, basically. So that's why it says stage number 4. See, I am not saying it is not recommended to buy the stock, or I am not saying that it will not break out. I am just saying that the probability of a breakout is low, or the probability that even if the stock breaks out, the probability that the breakout will sustain is low. That is why I don't want to be a part of this talk. As Mr. Rakesh Jhunjhunwala once said, you don't have to attend every party in town. Just because the relative strength of the stock is 92 doesn't mean that I am going to buy the stock. When I see that the stock is in late stage, when I see this, that the stock has already gone up like in less than 2 years, it has gone up 7 to 8 times. If I see such signals, well, I should have bought the stock much earlier, not now. Correct? It's very obvious. It's common sense. I don't even need to do base counting. I don't even need to check at what stage I am buying the stock. Okay. Sorry, at what base count I am buying the stock. Okay. So, see, today is Monday. Okay. This is 9th of December. The market will open in, let's say, 2.5 hours from now as I record this video. It's morning 7 o'clock. As you know, I wake up at 5 o'clock every morning, and I like to do video recordings in the morning. So after 2 hours, let's say the stock breaks out. Okay, it breaks out of this mother baby candle. It breaks out. Not only does it break out, it also closes above the base. Could happen. I am not saying it will not happen. All I am saying is that I don't want to be a party to this stock. Okay, because I see signs of weakness. I am not forming my opinion based on some feelings or thoughts or something like that. I am looking at data. What is the data telling me about the stock? When I do comparative analysis, I see weakness in two factors out of four. When I do technical analysis, everything looks great except for the stage of the stock, except for the base count. Okay, base number 4 means by the time I buy the stock at base number 4, it has already given a triple digit return. I have explained this in the base counting video. You can check that video later. But it's late. It's late to buy the stock. It could break out, but I don't want to take that additional risk. Okay. I may have taken, let's say, half position in the stock, but I'm not even taking half position because, see, when you go to market conditions, see, the market is currently in a rally attempt. Okay, the market is attempting to rally. It is not in a confirmed uptrend. So if the market conditions were in a confirmed uptrend, probably I would have taken half position here, or probably I would have taken full position here. Okay, and managed my risk on an intraday time frame chart. But given the fact that the market conditions are also not supportive to buying stocks in this stage currently, because the market could break down anytime. Just because in recent 1 or 2 weeks the market has gone up doesn't mean that the market will continue to go up. One weakness and all stocks will be down. Okay, when the market is weak, 3 out of 4 stocks in your portfolio will be down. This is documented in William O'Neill's book How to Make Money in Stocks. Okay, so again, let me summarize. When I do comparative analysis, I see two weaknesses. When I do technical analysis, I see one weakness. Now let's look at fundamentals. Now, if you look at fundamentals, fundamentals look good. Okay, the ideally I want accelerating EPS growth in the latest 3 quarters, which in this case is not there. See, there was a hiccup, it went down and then it again went up. But as long as this number, the latest quarter EPS growth, as long as that number is more than 40%, I don't have a problem. Again, for sales growth, as long as this number is more than 25%, okay, I don't have a problem. Ideally, I want to see accelerating EPS growth and accelerating sales growth for the recent 3 quarters. Okay, so fundamentally looks great. Return on equity is more than 17%. That is fantastic. What about margins? Let's look at margins. If you scroll down, see margins fantastic. 10 years ago, the margin was 10%. Now it is 34.60%. On top of that, the margin is at an all time high. Okay. The profit margin, if you plot it on a graph, the margin is at an all time high, which is a characteristic of a leading stock. Okay. So in fundamentals, I see good signs. There is one weakness, however. Let me show you. See, you have to be careful. See, you look at the latest 3 years, okay? 2022, 2023, 2024. Ideally, for a leading stock, this should be accelerating. There should be some positive EPS growth in every one of the last 3 years. That is the characteristic of a leading stock. If you study past 100 years of stock market data, and in this case, if you see from 2021 to 22, there is a positive EPS growth. From 2022 to 2023, there is actually a decline. Forget about accelerating or decelerating growth. There is actually a decline in the EPS, which is not a good sign. Okay. If you look at other stocks like Dixon, you see 32, 42, 62. So it is increasing. But if you look at Motilal Oswal, you see 22, 15, and then 41. So it drops in the second year and then goes to all time high. So the EPS being at all time high is a good sign. Okay. See, in the past 7, 8 years, the EPS has never been 41. Okay. So the EPS is an all time high, but there was a hiccup in 2023. Okay. And that is not the characteristic of a leading stock. See, I am trying to explain to you what is the characteristic of a leading stock. What should a leader look like? Okay. A leader should have positive EPS growth in each of the past 3 years. A leader should have accelerating EPS growth and sales growth in each of the past 3 quarters. A leader should have more than 17% return on equity. A leader should have expanding profit margin and preferably profit margin at all time high. A leader should have EPS at all time high. Okay. So these are the characteristics of a leader. Most of these characteristics are met by Motilal Oswal except for one. So if you see in every department, comparative, technical, fundamental, most of the characteristics are met. So the stock comes very close to being a leader. Okay. But in each of the departments, comparative, technical, and fundamental, there is one or two weakness minimum. Now, in such cases, I wouldn't bother much. I would buy the stock. Okay. If the market were in a confirmed uptrend or uptrend under pressure, I would ignore those one or two weaknesses because there are other factors which are very strongly in favor of the stock. But since currently the market is in a rally attempt, okay, then I have a problem with position sizing. I would either not buy the stock or I would go in with a small position size or half position size than whatever my normal position size is. Say your normal position size is 10%, then in this case you would go with 5%, something like that. Okay. So I have to adjust my behavior based on the market conditions because market conditions have a huge influence on a stock. Okay. So we have looked at comparatives, we have looked at technicals, we have looked at fundamentals. We have also looked at market conditions. Given all of these factors, my decision is that I'm not buying the stock because when I compare this stock with some other stocks in the stock market right now, I see better opportunities. Stocks which are even better than this. Okay, can you imagine? Motilal Oswal itself is showing very good number. There are just one or two hiccups or weaknesses here. But imagine there are stocks currently which are doing even better than Motilal Oswal. Okay, there are better numbers. Okay, I will make videos on Tuesday, Wednesday, Thursday, Friday. Each video this week, I will discuss one stock per video. Okay, and you will see why I am saying that. Okay, there are other stocks which I find better than this company, Motilal Oswal. Okay, that is why I am rejecting this stock. Okay, one thing we need to check is within the industry, what is the rank of the stock? How is it doing? At least market cap wise. Okay. See, in William O'Neill's book, he says that a leader doesn't mean that market cap wise it is at number one. No, that is not the definition of a leader. A leader is someone a leader is a stock which has good earnings, good sales, good return on equity, very good margins. Okay, all of these characteristics, if you look at, if they are the best in the industry group, that's a leader. Now it may not have the best market cap in the industry. Okay, but generally it is found that companies with these kind of numbers, if they are the best in the industry, generally that company will have the highest market cap within the industry group. Okay, so if you go to stocks, you see Geo Financial, Indian Renewable Energy Development Agency, and Motilal Oswal. So it is within the top three. Okay, if you look at the top three companies sorted by market capitalization, it is in the top three. So this is a leading stock. Okay, within the industry group, I am looking at top three. So when I do comparative, technical, and fundamental analysis, when I look at market conditions, ultimately as I'm making my decision, I also check whether the stock is a leader in its own industry group. Preferably, the stock should be in top three. At least if I sort by market cap, there are other ways you can sort. You can sort by profit margin, you can sort by return on equity, you can sort by any parameter you want. But this is the simplest I have found. Generally, if a stock is a leader in its industry group, it should at least be in the top three within that industry group. Okay, generally top three names capture the majority of the profit or the revenue within an industry group. So this is my 360-degree analysis of a stock. Now, practically speaking, it takes me less than 10 seconds to do all this analysis, but I have created a 20-minute, like a 20-25-minute video to just explain why I am not buying the stock. But practically speaking, I mean 10 seconds, I don't spend more than 10 seconds on a stock. That too, if it is showing some strength in some areas, if it is showing weakness in all of the three areas, I'm not even spending 2-3 seconds on that stock. So the way you can spend less than 10 seconds on a stock is only if you know what you're looking for. If you don't know what you're looking for, how will you do the analysis of a particular stock? So if you are looking at, let's say, 500 stocks in a week, you should not be spending more than 10 seconds on a stock. The stock should make first impression. When you look at the stock, within 10 seconds, your decision in your mind should be done. Okay. That is the reason why we have Market Smith and things like that. They have already done that analysis for us. We just have to look at the data and make a decision based on our predefined buying criteria. Okay. So again, let me repeat. I am not saying that the stock will not break out. Okay, I am not saying that one should not buy a stock, buy this stock. I am saying that the probability of breakout is low. The probability that even if the stock breaks out, the whether the breakout will sustain or not, that probability is low. And number three, I don't have to attend every party in town. Even if it breaks out and the stock goes from 1,000 rupees to 2,000, that would not bother me much. Okay, because there are other opportunities which are at this moment they look very strong to me. Okay, so that is the reason why I have rejected this stock. So this is my analysis. I hope this has added value to your trading journey. Thank you so much for your time. It's Monday morning. Have a fantastic day today. Thank you so much again.